Hello everyone, I'm Robert Spurway, Managing Director and Chief Executive at GrainCorp, and I'm delighted to be joined by Ian Morrison, our CFO, as we report GrainCorp's financial year 2025 annual results. It's been a really strong year for GrainCorp if you look at our underlying EBITDA, 308 million, our underlying net profit after tax of 87 million, both increases on the prior year, and importantly, the company's in really strong shape with a core cash balance of $321 million on the balance sheet. Ian, can you talk us through the segment reports and what's driven that result and some of the drivers behind it?
Absolutely, Robert. So I'll start off with the agribusiness segment. We reported an underlying EBITDA of 218 million, and that's up from 162 million in the prior year. So a really solid increase there. And that benefited from the strong crop production we saw across the east coast of Australia in FY25. We received total volumes of grain of 13.3 million tonnes into the network, up from 10.1 last year, and a strong export program of 7 million tonnes, up from 5.6 million in the prior year. That export program benefited from opportunities we captured across chickpeas and canola this year, which was really pleasing to see. And in addition to the grains we exported through our ports, it was also really pleasing to see the non-grain commodities handled through our ports contributing positively to the bottom line with a record contribution this year. Moving on to our nutrition and energy division, that contributed 117 million of EBITDA this year, and that's down from 134 million last year, largely as a result of softer crush margins. In our nutrition energy business, though, it was really pleasing to report a record crush volume of 557,000 tonnes, up from 540,000 tonnes in the prior year. And also our animal nutrition division also saw really strong growth in volumes, benefiting from demand across both Australia and New Zealand, and also the benefit of the completion of the acquisition of XFA that we reported on last year. I'll hand back to you, Robert, now.
You've touched on some really important points there, Ian, around our strategy, growing animal nutrition. We're also investing in the business. We've increased capacity at sites across northern New South Wales in particular, and we have a program of improving our ability to unload grain, meeting and exceeding the expectations of our growers, particularly as we head into this busy harvest time. We also have a transformation program across the business, which we expect will deliver 20 to 30 million in value over time as we implement that program, modernise our systems, but apply the full extent of the transformation across the business. The other thing that, listening to what you say, is we've been really good at controlling what we can. You talked about the large volumes through the year, but that's in the context of a market that's been fairly fully supplied with no global regions having droughts or impacts, and that means margins have been very competitive. But the GrainCorp team have done a great job going out, finding those opportunities, not just in canola and chickpeas, as you mentioned, but everywhere that we sell grain, trying to get the best value we can for growers that support us. Coming back to where we're at, I mentioned we've got a very strong balance sheet, 321 million. So that, in conjunction with the result, has allowed the board to declare total final dividends of 24 cents. That makes for dividends over the full year of 48 cents, and they're fully franked. So we really are delivering on that promise to provide returns to shareholders and, as I said, invest in the business as well. I really want to thank shareholders for your support. I want to thank customers and growers for their support. And I want to thank the employees for what's been a challenging year, but a strong year in terms of the results we've achieved. I wish our growers in particular the best of luck as we work through harvest. It's a busy time. We ask you to stay safe, and we look forward to supporting you in the year ahead. Thanks, everyone.